I'll keep talking so maybe you can hear me. Hey, buddy.
Me? Sorry, everybody. Tech support bought some new speakers, so I had to set that up, and I forgot. I hope you guys enjoy the stream. Goodbye.
Bye. That's funny. So, as we're waiting for Tom, so Tom just said all
right. Thank you for letting me know, guys. I could have gone on forever, and you wouldn't have heard a word I said. So,
well, Tom, what you said to me was really interesting.
It was fascinating stuff, and maybe, perhaps we'll revisit it someday. No, thank you, everybody. My apologies. Tech support that you just saw also subs as a DJ, and he runs some karaoke nights, so he just got a bunch of brand new equipment, set a lot of it up on this setup here, and it rerouted all the sound. So I had no clue how, as you guys are well aware, that's not my
Tom, even though we've already destroyed the first 10 minutes of the show, listen to this statement. Wall Street had the strongest week since April. The S&P is up 3.6%. The NASDAQ is up 5.2%. The Dow is up 3%. The Russell 2000's up 3.5%. I just find that interesting, and our stocks are eating the pooper scooper.
So that is a good segue. So welcome, everybody. Welcome to Talkin' Investing. You're here with Tom and George. My apologies for the first several minutes of silence. And what George just said is basically kind of where leads into where I'm at. While the market's raging, actually Bitcoin's even doing, I think, rather well. The AI stocks, the data center stocks, the Bitcoin mining stocks are just not doing well. And it's not just the data center Bitcoin mining stocks. It's all things AI are toxic for the moment. And I say for the moment because I'm going to go through why I don't believe there's really any chance that this trade is over. They're just punishing us. And my thumbnail basically said, I'm just done, because that's how I feel every day now. It's like, I'm over it. I'm done. I don't want to look at this anymore. I get it. You're going to tank all my stocks every day. So I would be better off not looking. I did make one purchase this week, and I am going to make 2 trades next week. So I said that there's 2 stocks I don't like. I will get to that later. I have 2 positions that I am going to liquidate next week. I just am going to spend the weekend putting a plan together on what I want to buy. And usually that is futile, because by the time the market opens, everything's automatically changed massively anyway. But I will be getting out of these 2 stocks next week. In addition to that, we had jobs information today, and everybody reported earnings in our space this week. And having said that, I'm going to go through why they did matter, and to another extent, they really didn't matter at all. So, I got to regroup here.
If you would do me so much favors and hit the like button, please.
Oh, yeah, we desperately need help. People are going to walk into... How many minutes of silence was that?
10?
I got to let people know. I got to change the thing right now. Oh, I'm going to create more silence by making a post.
You think so? You think they're going to bust Fred's door down, the Fed? Mara is almost nearly $10. Wow. Fred stole the life savings of thousands of people.
Mara was under $10 quite a bit of the day today.
Wow.
We're going to go through I'm going to go through their earnings. They reported earnings. I'm going to go through their earnings. I'm going to go through what analysts are saying about them. We got a jam-packed thing going on today, but again, it's like, well, we'll get tomorrow. That's that's its own conversation for sure, because all right, I'm just doing something really quickly here, changing this to let people know.
Wow. We should probably start setting up the stream through both of our accounts, Tom.
Yeah.
You know? Just saying it was difficult to find the stream.
They hide the stream. I'm also want to send out, I'm going to send everybody a notice as well, but I'll do that in a few minutes. I want to keep going here and get to some of what's going on. Listen, Bitcoin's around 65,000. We're in pretty decent shape here as far as where Bitcoin is at. And I think there's good things ahead. So I remain optimistic. But our stocks are still suffering. And a lot of this is headwinds and momentum that took place really to take out one individual, one fund. And we kind of went through it's a little bit ironic because we've talked about the situational awareness situation, Leopold Aschenbrenner, and that's probably butchering his name. I don't even know if that's right at all. Is a younger guy, 24 years old, I think, and he created a hedge fund. It took off. I mean, he was getting 1,000% returns. So what happened was, and we kind of celebrated it here on this channel, what happened was he put out his 13F and showed everybody, okay, here's all the new stocks I bought this quarter. Well, guess what? It was half the list was Bitcoin mining data centers. So, the first reaction was, wow, the guy who performed the best out of everybody in the entire stock market, he called everything right. I mean, he was undefeated. He just bought all our stocks. That's great news. They're going to go to the moon. Well, the hedge funds had another plan for him. And he, he's only 24 years old. And listen, life happens, mistakes happens. They don't usually cost $100 billion. But he leveraged himself about 4x. And so they just tanked these stocks. I mean, we walked through it on the members only day by day. They just once the pressure was on, once the banks were reaching out to try to get themselves out of trouble because they had funded this guy to a point where he was over leveraged and it was a disaster. Well, then all the hedge funds got their suspicions. They were already on a mission tanking these stocks, and then their suspicions were confirmed that now the banks were looking to maybe willing to take a haircut for somebody to take all this off of his hands. And so Citadel ultimately did that. And so, they got to buy all these stocks after they already crashed and then got some unknown discount on the whole thing on top of that. So we were the unfortunate, unintended consequences. We just kind of got to take that horrible ride along with the firm's situational awareness. And the thing is, once they beat a stock down, it doesn't just recover the night. We did have the day after Citadel took over, almost every single one of these stocks was up somewhere between 15 and 30%. So it was the best day my portfolio's had in many, many years. But since then, we keep giving a little back and giving a little back, and they're torturing us. Now, it was a mixed bag. We see a lot of green on the board today. We see a lot of red on the board today. But some of these stocks, I think, are ready to roll. Some of these stocks, I think we're in a real hit or miss situation. I think there's some winners and losers in the short term, midterm, and long term. So I'm trying to reevaluate. I'm going to consolidate into the ones that I think are the absolute best stocks here. And we're going to go through what that is. And as a result of that, I'm going to get rid of a couple of stocks because, you know, at some point, and I should have already done it by now, is the reality. So let's see. I want to go through the jobs report because that is the biggest thing that affected the market today. That was the big news. And before I get to the jobs report, I will say what I've said, I don't know, 100 times, 500 times. Take these numbers with a grain of salt because they give you these numbers and then a month later they revise them and then they revise them again. And then later on, they revise them again. So we have there's a very weak correlation between what these numbers say and what ends up happening. But the reality is, in the moment, this is the information that we have to deal with. And we being the retail investor, and what do we care? What we care is what's the Fed going to do with this information? Now, we got a new guy at the Fed, and we don't 100% understand which data points he's going to favor, care about, not care about. But I'm going to go through the jobs because this changed things, and this is going. I've been pounding the table on this, so I'm going to show you a stat in 5 minutes or less that I've been pointing to because to me, some setups are just super obvious, and I think a lot of people see it, but it's the exact opposite of the narrative. And I'm talking about what the Fed's going to do at the next meeting. So we're going to go through that, but let's look at the jobs report. Job losses in July and negative revisions reveal a weakening U.S. labor market. In a troubling sign for the economy, the Bureau of Labor and Statistics said that it was revised down the prior 2 months' jobs by a combined 103,000 jobs. So this is what I say, take them with a grain of salt. One of those months we thought was the best month ever, and the market was on fire, and jobs are out of control. We got to raise interest rates immediately, if not sooner. And then that job number got revised down drastically. This month was negative. Okay, the U.S. economy shed 23,000 jobs in July, a sign that the labor market has not stabilized after 4 months of positive growth. The unemployment rate ticked down only slightly to 4.1%. I'm going to talk about that a little bit more later. The unemployment rate is hanging out between 4.1, 4.2, 4.3. The single biggest thing by a mile that is affecting this is the number of people leaving the market. So there's a lot of people that used to be considered unemployed, and now they're saying, I'm not even looking for a job. So they don't count anymore. They don't have a job, but they don't count in the unemployment. So it's leaving that fairly steady despite these awful numbers. Economists surveyed by Dow Jones were expecting the release to show 83,000 new jobs. We ended up with 23,000 lost jobs. So that's off by 100,000. But wait, there's more. In yet another troubling sign for the labor market, the Bureau of Labor and Statistics said that it revised down the prior 2 months by a combined $103,000. May's job total was cut by 66,000 jobs. Remember, that was we added 200,000 jobs. The job market is on fire to the point where actually it's now a problem. Well, guess what? It got revised down again. And
I was right.
Yeah, exactly. While June's total was lowered by 37,000 to a total gain of 57,000. So that's another. So we missed expectations by 100,000 for this month, and then we revised the last 2 months down by another 100,000. The hiring data comes against a complicated economic backdrop. The U.S. war with Iran continues without any kind of agreement to fully reopen the Strait of Hormuz. I don't know what that has to do with U.S. jobs. As a result, energy prices remain elevated even if they are off of their highest levels of the year. So all of that's true, but it's got very little to do with who's hiring and firing. So economists had been expecting wages to continue pace at 3.5% from a year ago. The labor market is stalling again.
And Georgia just posted highest number of employees ever employed in Georgia last month.
Nice. Well, also remember, there's 3 or 4 states that continue to grow in population.
Oh,
so
yeah.
They're going to break that.
One of those states.
Right. I mean, I'm in another one. We're going to break that record. Even if unemployment goes up as a percentage, we're going to keep breaking that record.
Everybody keeps saying that no one's moving to Florida.
Well, I mean, I'm here, and there's a lot of people moving here right now. So that's all I can tell you. And the amount of new construction, I've only ever seen it this way one other time in my life. And that was back in about 2005. Now, a few years after that, we did have a massive, massive correction in the market. But 2002, 3, 4, 5 in Florida, we were growing. We couldn't keep up with what we were doing. But of course, then, everything's cyclical.
Well, that would make sense. So 2008, so we got 2 more years is what you're saying, Tom.
You could infer that from previous cycles, and I think that's pretty realistic. So this report was bleak. So I just want to go, let's see. Odds the Fed will hike in September tumble following the big July jobs miss.
Ooh, let's see if my thing went up.
Now, here are the 3 takeaways from the disappointing July jobs report. So to me, here we go again. Here is the market. Here is the media. Here is big money trying to tell us why, that thing you just saw, you didn't see it. You didn't see it. That didn't happen. That's not reality. This is reality. Number 1, misleading numbers. Oh, they picked today to decide their misleading numbers? The payroll decline of 23,000 wasn't quite as bad as it looked, and the drop in the unemployment rate to 4.1 wasn't nearly as good as it looked. The main reason for the red headline number was a loss of 53,000 government workers. A development economist said was largely owing to seasonal factors. Now remember, this guy can say that, but yesterday, as recently as yesterday, they were expecting to add 60 or 80,000 jobs. So you can't revise history and say, oh, we knew this was coming. I mean, it's just a misleading numbers. There was, this factor and that. Everybody knows exactly what happened after it happened. You know what? I know the score of every single football game that I've ever watched right after the clock runs out at the end of the game. I'm undefeated in knowing who won the game after the game's over. So this kind of talk to me is ridiculous. We know the consensus was we were going to add a massive amount of jobs, and instead we lost jobs. The vanishing...
It's amazing. If that would have came out just a few weeks earlier, Tom, we would have probably already had our rate cut.
Oh, there's still this... Whoa, wait for it. Wait for number 3. The vanishing labor force. On the labor force theme, the participation rate edged down to 61.4%, now off 0.7% points this year alone due to the exodus of nearly 1.4 million people. There's a strong degree of immigration noise in that number, but it still changes the dynamic by which policymakers will evaluate the labor market. A 4.1% unemployment rate suddenly doesn't seem as impressive with participation at its lowest in 50 years outside of the COVID area. We interrupt this for a request to smash the like button. You guys need to help me. I blew the first 3, 4, 5 minutes of this stream with radio silence. So your likes will help. Your chats will help. Comments will help. Help us. Anyway. So this is what I was talking about. People are just leaving the market. So, you know, when they leave, when they exit out, they're not considered, and that doesn't mean they're leaving the country. They're just leaving the labor pool. So if you're not looking for a job anymore, you're not unemployed. You're not employed, you're just nothing. You don't count.
And how do they even know this?
Well, that's why these numbers get revised over and over and over and over. And now here, to your point, George, wither the Fed. Markets reacted to the report by taking a September rate hike off the table. Not so fast. And this is why they wrote this whole article. This is what all this was leading up to. Central bank policymakers may take more signal from the lower unemployment rate, as they could view it as an indication of a relatively stable labor market, a common theme in post-report commentary from Wall Street on Friday was the Fed officials likely will set the report aside. Oh, why? Because it's the exact data and information that you would use that says historically, you get a report like this, you go, time to lower rates. But no, we're going to set it aside because for some reason. Right? Because it's not like, oh, these are suddenly inaccurate. The last couple of years in a row, in addition to the massive revisions 1 and 2 months later, at the end of the year, they get revised by 500,000 or 1 million jobs. Again, on top of all of those revisions. So let's not pretend that all of a sudden today, this Friday, this report suddenly became something the Fed needs to ignore because it's no longer reliable. So don't believe everything you read. This is the setup, But here, I'm going to show you. The market didn't believe it because I'm going to press refresh and just make sure these are the latest and greatest. We now are up to 57% no rate hike in September. So you'll see 1 week ago, this was at 33%. It did get down into the low 20s at one point. Actually got under 20 at one point. We were over an 80% chance of a rate hike. And at that time, people were debating, is it going to be 1 rate hike or 2 rate hikes? Well, we didn't get the rate hike in the last meeting. So we know that didn't happen. So now people are debating 1 or 0, but this has gone up like 300%. And it's going to end up at 99, where I said it was when it was under 20, because they're not raising rates. So obviously, that is my opinion. I don't know the future. I don't sit in the meetings. I don't get to make this call. But I do know, unless the world's gone mad, unless up is down and down is up, they're not raising rates. But let's do a poll. Let's see what you guys think.
I'd help you out, but I'm barely making it. I don't have any internet at my house, guys. So I'm on my phones.
Okay, well, the Fed raised rates at the September meeting. What do you guys think? And understand, this was just a few days ago. This was a foregone conclusion. The Fed was raising rates, and it was, to me, I've said on every stream I've done that there is no chance that that was going to happen. Now, I'm not celebrating because we haven't gotten there yet. There's still 6 weeks in between today and the next meeting. So I don't know what's going to happen in the middle, but I suspect it's going to be a bunch of more data points that really give the Fed no cover at all to raise interest rates, which would be borderline catastrophic maneuver for the stock market. Now, the Fed might not care about the stock market. I think it will also be borderline catastrophic for the economy, much more importantly. So let's see what you guys think. I'd like to thank everybody for joining us. Special thanks to our members. I see Sour Melon Gaming is our number one person in the chat right now. So thank you, Sour Melon, as always, for not just showing up, but participating. And if you just got here, or if you haven't yet, if you could smash the like button, it does help us out a lot. It's much appreciated. All right, let's keep going. So this was the news of the day. Jobs report was garbage. It was just garbage. I don't know how else to frame that. And this one's not complicated. So the last one, weak jobs report helps the case for the Fed to hold rates, but doesn't take hikes off the table. So you are going to get this narrative shoved down your throat. Don't expect this to end. They are not done scaring you, fooling you, to use a nice word. And this is the stuff that's exhausting. It exhausts people. It exhausts investors. It affects the market on a day-to-day basis. It's not going to affect where everything ends up when it gets where it's going. But, you know, when days turn into weeks and weeks turn into months, we've had sometimes months turn into years, exhaustion can set in. And at some point, you know, if months turn into years, at some point, even if your stock gets where it's going, the time value of money, you maybe are going to break even at best, even if it makes the move you wanted it to make 2 years ago. So you got to consider that piece of the puzzle too. Sour Melon Gaming said, love the community. If I don't show up one day, I either got taken or I'm dead. Well, let's hope neither of those things happen.
Yeah.
But I got a movie you can watch if you got taken. I got somebody that's got some good advice for you. He has a particular set of skills. All right, let's talk.
You weren't going to talk about that, Tom.
Huh?
Thought you weren't going to talk about that.
Oh, that's right. Sorry. Are we live? Okay. Let's talk about some of these earnings reports because we got inundated with information this week. And, you know, some of this stuff is hard to sift through and figure out what's important, what's not important. And then you got analysts talking, you got, you know, talking heads on TV, on YouTube. So I'm going to try to sort some of this out if I can. And I'm going to start with a company that did not have their earnings report this week, but that did put out an announcement. BitDR. This is the only thing that I did all week. I bought BitDR. I sold nothing, and I bought BitDR. BitDR announces $4.7 billion 16-year AI high-performance computing data center lease for Tydal, Norway campus. I did not see this coming. I'll just tell you. To me, this was like This was Christmas morning. This was just a total win the lottery bonus round. Approximately $4.7 billion in contracted revenue over the initial 16-year base term, with the potential to reach a total contract value of $8 billion through a one-time 8-year lease extension. Now, to put this in perspective, I had broken down all of these companies into categories and basically said, listen, BitDeer is, and this is true, this is still true, they make their own machines. So this is for Bitcoin. This is for the Bitcoin side. I put them in the mostly a Bitcoin miner category because they do make their own machines, so it's very cost effective. It turns out their machines are good because their efficiency level is fantastic. They mined, 900 Bitcoin almost 1,000 Bitcoin last month. So they are the largest miner by the amount of exahash they have, by the amount of Bitcoin they mine, out of all publicly traded miners. So I had kind of settled to the fact that, listen, they're a little slow on the AI side of things. They're talking about it. They're whispering about it, but, don't hold your breath. Well, boom. $4.7 billion. And the thing is, I want to get to the numbers here because they matter. Okay, key economics. Tenants, okay, contract is $4.7 billion over the initial 16-year base term. Tenant has no fee termination right at 10 years. So they're locked in for 10, but after 10, they can bolt if they want to. So that's 10 years of sight on this contract. Tenant renewal option, 8-year extension, increases potential contract to $8 billion. The important thing here, net operating margin, estimate net operating income margin of approximately 90%. So we just saw, this puts this in the league of what CleanSpark just did. They got a deal that's even bigger than this, and it's 100% margin. So these tenant lease deals are exceptionally profitable. So this is throwing basically 90% of this $4.7 billion is getting thrown straight to the bottom line, meaning profit, net income. So this changes this one contract, even though they're the biggest Bitcoin miner out of all the Bitcoin miners, they're now going to get way more gross profit from leasing out their space, being a landlord, than they are from all the Bitcoin, the 1,000 Bitcoin they mine a month. And it's not even close. This totally fundamentally changed who BitDeer is. And on this news, the market was so elated that BitDeer went up 1 penny on the day. 1 penny. By the way, it opened up 14%. And then it went down and down and down until it was up 1 penny. And since then, because this was a few days ago, right, this was the 4th, which was Tuesday, it's actually down. So 0% of this deal at this point, given the fact that they have not gone up at all, this deal has been priced at 0. That's not an opinion. That's what happened to the stock. The stock has valued this deal, which is a 90% net profit deal of $4.7 billion. It valued it at 0. That is not going to stay. That will not stand. Now, Are they going to try and drive everybody out of BitDeer in the middle so they get it for dirt cheap? I bought BitDeer, and I will keep buying it. It's the only one in this sector. I think there's another stock worth buying. And again, this is not financial advice. I'm not telling you to buy BitDeer. I'm telling you I bought BitDeer. The other stock I would buy is CleanSpark, except it's my second largest position in my entire portfolio. I'm not adding to my second largest position in my portfolio, particularly when it's up dramatically. Even though CleanSpark stock is underperforming ridiculously, I dollar cost averaged in through the entire crypto winter, so I still am up huge. I'm very disappointed with it. You know, it's hard to do. That's one of those things where you go, oh, you're up 300%, but you're pissed because you know the stock should be double what it is right now. But the reality is there's no room to dollar cost average in at that point. I mean, that's how I look at my portfolio. It's my second largest position. I'm up huge on it. And so, but I do think if I was starting from zero tomorrow and picking stocks, I would pick CleanSpark and I would pick BitDeer. So again, not financial advice, but to me, those two have had game-changing deals. CleanSpark's deal is going to throw $300 million of net income to the bottom line every year starting next year. So, and the price, and CleanSpark's down since they wrote that contract. So this is what I'm talking about. To me, those two are a buy. Let's end this current poll. Will the Fed raise rates in the September meeting? So we're about 80-20 right now, George. 20% think yes, the Fed is still going to raise rates in the September meeting. Now, there's 6 weeks between now and then. So who knows what's going to happen in the middle? But I just think from a macroeconomic standpoint, with everything being what it is right now, it would take something catastrophic between now and then for the Fed to raise rates. That's my opinion. I've been saying it all along. I've been consistent on that. I remain consistent. The Fed watch tool's moving in that direction. It's almost tripled the odds that they won't do a rate hike in the next meeting, and I think it's going to keep going that way.
Tom, somebody asked, what are the two stocks in your thumbnail?
Ah, all right. I'll get to those. How many likes we got, George?
I can't tell.
Oh, you can't see. Oh,
No.
Somebody drop in the comment. Do us a favor and smash the like button. I appreciate it. I think it is helping the stream. We must have some people smashing the like button because...
We're over 100.
Well,
100.
it's much appreciated. So, okay, I will tell you the two stocks. I didn't want to just spit them out. I wanted to go through them, but let's say them right now, and I'm going to go through why later. And it's for different reasons. And some of you will probably strenuously object to one of these two stocks. I'm guessing that nobody will object to the other one. One of them is Marathon.
Marathon. I was going to say Marathon.
Nobody will guess the other one. The first one is Marathon. I'm pulling the plug. And the only thing that, hindsight's 20/20. I sold 20% of my Marathon position just like 1 week ago at $14.30. And in that moment, I thought to myself, I really should sell 100% of this right now. This is a golden opportunity. They had a big press release. Their stock popped huge for a period of the day, and I dumped 20%. And boy, I got to be a glass is 20% full. I can't be half full because I only sold 20%, but at least I got rid of that 20%. I'm getting rid of the rest. I don't care if it goes up, if it goes down, if it goes sideways. I'm out. I will go through. They said some stuff. They've put together a narrative. Everything sounds great. It's all going to be a grand slam home run. And listen, maybe their stock's going to double, triple, quadruple. I've had this stock for 5 years. It's got to triple right now for me to, I'm red. 5 years later, I'm red on this stock. And that doesn't count the time value of money. I'm just straight up down on the stock.
And was it a large holding for you, Tom?
It's yes. It's not one of my top 5 holdings, but it's one of my top 10. Yes, it's one of my top 10. So this is not a little position. This was just a bad. You can't win them all, and I'm not going to win unless somehow this thing goes up 200% Monday morning. I'm not going to win on Marathon because I'm out. That's it. I would have sold today. I prepped for this all day today, and I did no buying or selling. But if I had had the time, I would have put a plan together and executed it today. As it is, I will try to do that over the weekend. So, but I will go through Marathon. I think that was the more obvious one. Here's the one a lot of people might object to, and I hold this stock, and I am going to sell it, and it's AMD. I will be exiting 100% of my position in AMD. And I'm going to go through why that is. So I'll let you know right now so that you guys know the 2 stocks, but we're kind of going in order here, and I'll get into the details of that later. Those 2 I went through my entire portfolio as I often do, and those 2 just did not make the cut. There's 2 other stocks that I'm not in love with that I own. So maybe we'll talk about those later, but I'm not going to sell them. I'm more likely to add to the position than sell them, but I don't love them, but I'll show you why that is later. Sourmelon said, Fred is just dumb. He doesn't understand the industry. Go watch one of his interviews. Unfortunately, I watched an hour-long interview with Fred, and that was one of the final pieces to my puzzle. I'm not going to say he's dumb. I don't know. He could be a rocket scientist for all I know. His philosophy does not align with my philosophy. And, that's easy to say sitting here at home. But, I feel like if I were doing his job, I'd be doing it a lot better than he is. And I'm sure there's a lot of shareholders that feel the very same way with the stock underperforming for years now. And now we've got a brand new plan on why it's going to be all good. And I will show that. And listen, if he's right, they've caught up before. They had one of the worst years ever. 2022 was a train wreck for Marathon. And they got down to almost, I think they had a month where they mined plus or minus 60 Bitcoin. They were in almost last place out of every company that we track. And they had been the largest Bitcoin miner just 6 months earlier. So, that's how bad things went for them in 2022. But they eventually did get all their new capacity online. And they recaptured their position as the largest Bitcoin miner and held that for 2+ years. Really, until BitDR just recently passed them. So it's been years. Now, for whatever good that's worth, Ethan said, I love AMD. I'm going to go through my AMD situation is a lot more nuanced than my Marathon situation. I do not believe in Marathon's management. I believe they were unbelievably late to the AI game. They're trying to make up ground. They said some things that, they're expecting great things to happen sooner than later, and maybe all that's going to be true. But the other thing is they have partnership deals and joint ventures. He basically, one of the things he said in the interview was, we waited a long time. And I'm going to paraphrase, so please go check out the interview yourself. Don't take my word for it. But it was something to the effect of, we just simply don't have the expertise in the building to build data centers, sell compute space. So We didn't get into the business. We waited. And now we found a good partner that knows how to do that, and we'll do it together. Well, that's probably better than not doing it at all. But number one, you're a couple years behind everybody else. And number two, now you're splitting the profits with someone else that has you're outsourcing all the expertise versus an IREN who for 3 or 4 years now has been pounding the table. Actually, when they started this, it was agitating me. There was a time 3 or 4 years ago where 100% of their revenue, and it remained that way for years, 100% of their revenue was from Bitcoin mining, and they would lead their conference calls by saying, we are not a Bitcoin mining company. And I'm thinking to myself, well, I mean, it doesn't get any more higher than 100% of your revenue, so I feel like maybe you are a Bitcoin mining company. But his point was, and he was planting the seed, and I think he was right. He said, we build data centers. Ours are better than everybody else's. This is what we do. This is what we know how to do. Right now, Bitcoin's how we monetize it, but it's not who we are. And I think that has proven to be correct. So there's a company who's saying the opposite. He's saying we do have all of the expertise inside. In fact, that's what we do. So I have an Ultra. That is my largest position. It is beaten down, I think, for several reasons. A lot of AI trade has been beaten down. That's the short-term trend. On top of that, it was situational awareness, 4th largest position in their portfolio. They were the 2nd largest holder of IREN. So I think that really did a lot of damage to their stock in the short term. And Old Jack is saying on AMD, was it because of AMD's underwhelming future performance forecasts? That is a piece of the puzzle. Yes, Old Jack. And here's the thing. I'm very conflicted about it. They beat on revenue. They beat on earnings. They raised guidance. So in a vacuum, you go, well, I mean, you beat on revenue, you beat on the top line, you beat on the bottom line, you raised your guidance. I mean, what more do you want from me? But the reality is the market wanted a lot more than that. And the market priced in, most importantly, a lot more than that. And I'm going to go through those numbers. So yes, they needed to blow away the expectations because there was a whisper number on the street that was $1 or $2 billion higher in revenue than even the number that they beat. I think the market was looking for $12.5 billion in revenue, and they got $13 billion. You can correct me if these aren't exactly right. But the whisper number was that it was, we were going to be dazzled. It was going to blow that away. But it didn't blow that away. And it was priced to blow that away. So I'll go through the numbers, but that's why it was a low conviction trade. I said when I bought it, and I was talking to the members, not sure if we've talked about this on a Friday or not. I'm doing something with AMD that I very rarely do. I have 3 stocks that I'm doing with, which is it's a momentum trade. It's not that I don't think it's a good company. I actually think it's a very good company. They have a very good future ahead of them, but they are priced at the ridiculous, at the absurd at this point. Having said that, I've seen so many times where this is the point in the cycle where you think, this thing's out of control. I should short it. Well, no, you shouldn't, because it's going to double. And then you can short it, but it's going to double first. And I think that may still be true with AMD. I just am finding out, I'm relearning a lesson that I've known a long time. I am not good at momentum trades. I look at the fundamentals. I look at technicals, but my number one thing is looking at the fundamentals, understanding the financial statements, understanding what the business is doing. Is this a good business model? Are they going to grow? Are they going to keep getting better? How is their valuation, which is very important because you can be the best business on earth. But if you're trading at a 300 PE, you're overpriced. I don't care how good you do. You're just overpriced. So now, having said that, like I said, sometimes when a stock's overpriced, the very next thing it does is go up hugely from there. Ultimately, it settles where it should settle, but you could go broke between now and then. For me, I got to get out of this trade. I have no conviction because they're priced so strong right now that I don't know that they can outperform to the level where they're not going to run on fundamentals. They're not going to run on fundamentals. They very well could easily run on momentum. And they could easily double on momentum. I don't want to stomach it. It's not what I do. And, I got in, I watched it start to go in the right direction, and now it's turned all the way back around, and I'm plus or minus break even on this right now. So I think I've learned a little lesson that it's just not my comfort zone. And so that's why, and I'll go through the numbers in more detail a little bit later, but that's why I'm not out yet, but I am going to get out of AMD. Alim is saying, Tom, your take on Keel next week. So we're waiting for Keel, and Keel is next. They are on the hot seat for me. Marathon was on the hot seat for a long time. I give up. I'm done. I'm out. Keel's got to get a deal. They got to get one deal. They got to break the ice. Preferably not an undisclosed company. Preferably a name we know. And what seems to happen is when these companies get their first deal, more deals follow. The pressure is off. So Keel is one of my top 5 positions. And I had a pretty specific thesis on it getting from the $1 and change to the $5. It did that. It needed to get a deal. I thought there was a shot at it running from 5 to 10, and I was going to dollar cost average out in that area if and when they announce a deal. So we'll see how that plays out. Now, I'm up huge on this one as well because, again, I've been dollar cost averaging in for a long time. So I'm very disappointed in the pullback. Don't get me wrong. It is brutal. We don't measure from... This is just how psychology is. We don't measure from the day we bought the stock. It doesn't matter if I'm up 350%. It matters that I'm down 40% from where I was 2 months ago on that stock. And it's frustrating. So they are now taking Marathons. Marathon was on the hot seat. They are fired for me. Now Keel's on the hot seat. I like Ben. I think he's fantastic. I think operationally he's brilliant at what he does. He's a very smart person, but they need a deal. And I know, things take a long time and you don't want to be impatient, but I think it's fair to say at this point I have not been impatient with formerly Bitfarms, now Keel. I think it's been extreme patience, but it's time to show us the money.
Wow. You're saying that about Keel?
I am.
Who is this guy?
Here's the deal. I mean, I said all along, Keel, I like Keel. I think they're a great company. I like their new management, right? They've had a bumpy road. They've had to switch gears multiple times, but my sense talking to Ben was he gets it. My sense looking at their monthly operational reports for the last 5 years, I know they get it. It's some financial decisions that have happened along the way that have been big stumbling blocks for what was then Bitfarms, which Ben had nothing to do with in any way, shape, or form. So I think they will execute. They'll build out their data centers in a timely manner, all of that stuff. But they have to prove to us that they can get a deal. And it's hard because their data centers aren't plug and play right now. They're not ready. So people are desperate for power, and they're not trying to make a deal for power 12 to 18 to 24 months from now. They're trying to make it yesterday. So now the smart people are doing both because this problem's not going away anytime soon. But I think at the moment, they have got to convince somebody, and I'm sure they're talking to several people, right? There's been whispers. The other thing is, once the whispers start, which started months ago for Keel, now all of a sudden a different clock is ticking. It's like now you're in anticipation of an announcement, and now a month goes by, and then 2 months go by, and now 3 months have gone by. Now they're going to report quarterly earnings, and my guess is they don't have a deal. Who's in line next? Just so that everybody knows, and this is not a complicated equation from my perspective, so I think you're seeing a pattern. The next person up in the batter's box, they're not on the hot seat yet, is Riot, which is also one of my top 5 positions. IREN, Riot, and Keel are 3 of my top 5 positions. IREN's my biggest position. I feel phenomenal about IREN. I won't buy more, but if I did, I'd feel great about it because that one to me has the highest risk reward out of all of these. Oh, and somebody's asking, Tom and George, here's a poll for you. Riot platforms, hot seat or cold seat? I'm going to do just a little different than that. Let's see what you guys think. These are my next 2 in order. I'm not going to put Marathon on there or it's just going to win 90% to whatever. The 2 that I have in order are Keel and Riot. Which one do you guys think belongs on the hot seat next? Those are the 2. And again, my equation is simple. I'm looking at companies that have 0 deals. 0, you got to get off the schneid. You cannot be at 0. You got to break the ice. And, a lot of these other companies, even, I was looking at TeraWulf, which I'm going to talk about. They reported earnings. Their revenue is so far away from now that it's frustrating. But they have a list of impressive, some of the largest companies in the world that they have signed deals with. So, that's the good news, bad news with a TeraWulf. I don't like the fact that most of those deals, they're not even going to get revenue from next year in 2027. But they do have signed deals, and they're with names we know, and that makes a gigantic difference. Now, Wolf has taken a beat down along with all the rest of these stocks. So we're going to look at where these stocks sit today versus analyst price targets because it's shocking. I do not put a lot of weight on analysts. You guys, most of you probably know that. But a lot of these, I'm going to show you, a lot of these price targets are brand new. They are price targets after all these guys reported earnings this week. So they're not old and outdated. You know, there's sometimes where the price target's wildly out of whack, but that's because somebody picked up coverage 8 months ago. They haven't updated it, and so now the situation on the ground has changed dramatically, and the price target looks ridiculous. That's not the case here. These price targets are mostly 1, 2, 3, 4 days old. This is what analysts think now, and it's crazy. Riot doesn't have a deal. Marathon doesn't have a deal. Keel doesn't have a deal. Talking about a real deal. I see somebody saying, Tom, you're talking about Keel exactly like I feel about CIFR, Cleanspark, and Wolf. Entered greater than 4 years ago in these and saw my capital absolutely destroyed about 40 to 50% in the past weeks. And you're right. It's every one of these stocks. But here's what almost every one of these stocks has in common. I mean, let's just take a 1 minute sidetrack, because this whole sector that we're in here, it's taken a brutal beat down. It just has. So if you look at, well, actually, I'm going to do this a different way. So let's see the stocks that you named in specific. CIFR. Okay, ready? Because they're all the same. Here. If you feel like you just lost half your money in CIFR, that's because this is June 22nd. That's like 5.5 weeks ago. Down 43% in 5.5 weeks. Now, to a certain extent, you've got this range from here to here that you can see. It did try and break out of this, but it didn't stay there. So it hasn't left its range, but that's a big range. It's down 43% in 5.5 weeks. That's devastating. It's devastating if it's one of your stocks, but then if you keep going and you go, okay, well, at least I got Wolf, except Wolf down 44% in the same period from the same day, June 22nd. So you're getting wrecked on Wolf. All right, well, at least I'm in Keel. %. You're down 47% if you're in Keel since 1 week earlier, June 17th. Cleanspark was your last one. This one's actually held up better than the rest, but still, you're down 35% on your Cleanspark position from June 18th. You know, if you go back to October, you're down 48%. This is a company that since October, it got a deal that's going to throw off $300 million of net profit every year for like the next 15 years. That's the best deal. It's better than all the deals it's ever gotten and done, everything it's ever done from the beginning of time until now. And the stock's down almost 50%. These stocks are beaten down. They are being sold off as a part of a consolidation period, in my opinion, as a part of a consolidation period, because I think there are multiple more legs up in this AI trade. And so I think you're going to get periods like this. We see peaks and valleys and peaks and valleys. And I mean, look at this move. From October to November, down 62%. Ouch. I held the stock through all that. I actually added some stock during that process, which is why it's now my second largest position. But I'm not adding any more, so when I, at least if you got more room to add and your position's not full, you go, okay, you know what? It's uncomfortable being down, but you know what? Pile it on while you're doing it because I'll just buy more here. But for a lot of my stocks, for IREN, I'm not buying anymore. For CleanSpark, I'm not buying anymore. For Keel, I'm not buying anymore. For Riot, I'm not buying anymore. For Marathon, I'm selling everything I have. So, whatever happens to those, I'm just along for the ride now. So it's a different position. And this is why it's different for every single person. And this is why we talk about do your own due diligence and have your own conviction, because everybody's portfolio, everybody's in a totally different place. Like I said, if I had no CleanSpark, I would be backing up the truck right now buying CleanSpark. But I do have CleanSpark.
I don't understand CleanSpark.
But there's no sense to it. It's not trading on fundamentals. And it's not done because, look, and who knows, because these things are so erratic. But from a technical standpoint, it just had a bearish crossover yesterday. It's headed back down. This could easily, it's at 42 on the daily RSI. This could reset down to 30. This could retest $10 again. There seems to be some support between now and then that makes me feel like it won't do that, but it could do that. Right, the last time it got very close to 30, it got to 32.5. It was actually right where it is right now, somewhere around $12. So, there's some decent support right here. We'll see if it holds a little bit more, at 11 and change. So you could see some more downside. But again, this one's no good for me because, if we do this and bounce off of here and go back up, I can't do anything right here. I shouldn't say I can't. I won't. I'm not going to dollar cost average in at this point. There are other stocks that I'm enjoying the pullback on because I'm building out new positions. Some of these stocks I'm going to take my Marathon money and put into some of their peers that we just looked. Everything's gotten wrecked.
Don't you mean your Marathon change?
Yeah, what's left of my Marathon position. HUT, which was this thing's been the dominator this year. It's down 37%. In the middle of the day today, it hit 40% to the downside. So, there's no safe place. Look at BitDeer. This is why I'm buying BitDeer. This is not a long time ago. This is June 3rd. This is 2 months ago. BitDeer's down 47%. And BitDeer just signed the game-changing biggest contract in the company's history. This is fundamentally a different company as of a few days ago. And what's been the move on that? It's down. It's literally down on that news. So I can't make any sense out of that. Right, here's the day. This is where it was the day before that news. And you can see it jumped up. This might look like a little bit, but it's not. This was at the peak. This was just under 14% to the upside, but it finished the day up 1 penny. And what's it done since then? It's down. It just announced the biggest deal it's ever had in its history. And the thing is, it's not like, well, it's a sell the news because this stock's gone to the moon. No, this stock was, prior to that point, This stock was down 45%. They get the news, the best news they've ever had, and what happens? They keep going down. This is a 2-point-something billion dollar company. It's so disproportionate to its peers that it's mind-boggling. So I have a super high level of conviction in BitDeer. I'm going to take some portion of my marathon. You know, had I acted sooner, BitDeer's up 3% today and Marathon's down 5%. So I keep getting less and less on my money every day that passes. But I don't care. I got to get out because BitDeer under $11 is just, to put it in perspective, I mean, this was a $27 stock in October. This was a $21 stock in June, 2 months ago. It's trading in the tens right now. Right? I mean, this is... And again, all of these previous highs, they had no AI. I shouldn't say none. They had an immaterial amount of compute that they were selling. What they just did in this one deal is 100 times bigger than everything else they were doing prior to that. So this is one, to me, I go, great, because look, it just hit. This is on July 29th, last week. It just bounced off of oversold. So it's already reset on the RSI from this peak. This stock should run, and I don't know. Am I going to wait a week? Am I going to wait a month? Am I going to wait 6 months? I never know what the answer to that is. And to show you my point, we talked about this stock live on a Friday stream. This is Stretch, stock ticker STRC. This is the preferred stock for Strategy, formerly Microstrategy, stock ticker MSTR. I spent a half an hour. Right, this was Thursday, this was Friday, so this is where we closed. This was at $74 when we had this conversation. By the way, on that day, it got down to $71. And the equation was really simple here from my perspective. And this is how I laid it out, and I'm not going to belabor this. I'll just go real quickly. This is their preferred stock. This is the vehicle by which they buy Bitcoin. They pay now a 12% dividend on this stock. It was 11.5% when we had this conversation. I said they'd raise the dividend, which they did, like 1 or 2 business days later. It's now a 12% dividend, but it's not 12% on the price it trades. Par value for this stock is 100. So they got to pay 12% on 100. So if it's trading in the 70s, you're getting 16, 17, 18% dividends on this stock. So I told everybody they're not going to buy any more Bitcoin until this stock's back, and it's actually at 95 today. I said it's got to at least get back to 95. They probably won't buy any until it gets back to 100. This should peg at 100. I could see them buying at 95. This is finally back in a range, although I think people might press the panic button. I think they got to finish what they started. So this stock's up, right? And there's a cap on it because it's going to stop at 100. It's not going to go beyond par. But when we had that conversation, that was a 34% upside. And I said, the only question is this going to take a week, a month, 3 months, 6 months? How long is this going to take? Because they can't do anything until they fix this. Oh, by the way, this company is filthy, stinking rich. So what have they done in the middle? They just bought their own shares back. They told the marketplace, if you're not going to buy Stretch, we'll just buy it all. And that gave the market confidence. They started selling Bitcoin, which initially made the market panic. But now the market's going, okay, I want to own Stretch because these guys are willing to spend money to buy it back themselves. They're willing to sell their Bitcoin to do it. This is a good product. Like, I'm going to get paid out, and this is paying out 12%. Not too many places on this earth where you get 12% dividends on your money. So this was virtually, nothing is certain. This was virtually an inevitability. We broke this down exactly what was going to happen, and that's exactly what happened. So, now not a lot of arbitrage left. Between 90 and 100, you still got, or 95 and 100, you got 5% left. If you want to try to grab that last 5% is the worst 5%. This was the easy money, and it's over. But my point is, the one thing I didn't know, it was certain this was going to happen, or nearly certain. The one thing I did not know was, how long is this going to be? Right? This was June 26th. It took until August 7th. That's like 5 weeks. Is it going to be 5 weeks? What if that was 5 months? Would you have been comfortable holding? Now, remember, if it was 5 months, you were going to be getting paid 13, 14, 15, 16, 17% dividends every single month along the way.
Explain to me how you would be paid more than 12%.
This vehicle, this preferred stock, has a stated interest rate, and that interest rate is on its stated par value. So this is a par $100 preferred stock. So when they pay a dividend, they got to pay 12% of $100. If this stock's trading at $70, you're getting 12% of $100, but you only paid $70 for it. So now you're at 17, 18% interest. I mean, look at it, gap. It jumped up because, of course, this was crazy. But there was a narrative, and to go back to what I talked about in the beginning, this is where the retail investors get lied to, and it's relentless. It is a relentless stream of misinformation. If you were looking at that time, you were seeing, is Microstrategy going out of business? Are they illiquid? Are they going to have to sell all their Bitcoin? By the way, at that time, they had sold a sum total out of their 847,000 Bitcoin. They had sold 32. That's 32.0.
Tom, so I'm still getting my 12%. I haven't missed a month, by the way.
Yeah.
Even though the numbers went down and everything, I just left it alone.
Yeah, so you're getting a lot more than 12% because you bought this low.
I think I bought it at like 94 or something like that.
Okay, so I mean, you got your 12% all the way down and all the way back up, but it was much more than that, effectively. And that's why, so here's the thing. Once this gets to 100, they're going to start selling shares of their preferred stock and buying Bitcoin again. So the whole silly, I'm going to call it, I don't like to say stupid, but it was a stupid conversation. There was approaching a 0% chance happening what the vast majority of the media, social media, etc., was trying to say was going to happen. It was at virtually a 0% chance of that. The mechanics of this was just a mechanical situation, right? This is physics. This was what was going to happen, and it did. So this is why you got to drown out the noise, which is very difficult because you're going to get flooded. You're getting flooded with it right now. You're getting, right? We just had let me know in the comments. You got another word for this jobs report than junk, garbage, horrible? Right? We missed expectations by 100,000, plus we revised the old numbers down 100,000. So, and they're spinning that as if, well, the Fed still kind of got to think about raising rates. You know, that report's that doesn't really mean what you think it means. It's not real. So in the meantime, there's a line at $101. Now, MicroStrategy might do better than this, but I said they will not get back to $101 until Stretch gets back to $95, because the preferred stock is ahead of the common stock. We all know that, and so that was how this was going to work. Well, it got to $100 the day Stretch got to $95. We'll see what happens next. There's no guarantee this goes straight to 100 from 95. This could bounce around. Right now that most of the arbitrage money's gone, it could bounce around here, but it's done what we said it was going to do. And the key obviously is if Bitcoin keeps running. That's actually not key to Stretch at all. It's key to MicroStrategy, or strategy now, stock ticker MSTR. Bitcoin's got to go up for that to go up. But Stretch has to be fixed. The preferred stock can't be broken and have mass people buying up the common stock. That's just not how the market works. So we've seen this play out as expected. I'll leave it at that. Who would be on the hot seat next? This stayed very, very, very close the whole time. For a long time, it was 50-50. Keel edges out. 60% of people think Keel belongs on the hot seat over Riot at 40%. So very close. Those are my two. And listen, I still have confidence in both of them. I have not lost confidence. But at some point, you got to live in reality. I can't, my time frame can't be, I'm going to wait forever to see if maybe someday they make a deal. That's not a reasonable investing strategy. So I'm not going to rush to judgment, but I can't wait forever. And with Marathon, and let's just quickly go through Marathon, because here, according to them, life is good. So, and I'll tell you something. My guess is when this trade is back on, Marathon's going to run with the other stocks. So that's short-term stuff. So I get it, but I'm done holding what I view as a stock that's not going to win in the long term. And this is more of a long-term decision. I'm not going to sell it at the perfect day. Obviously, I almost did. I sold 20% of it at $14.30. Just here, we can find out what day that was, because it was only one day. It was this day, June 22nd, and this got up to $14.49. I sold 20% of my shares at $14.30. So I feel like with 20%, I rang the bell at the top. I can hindsight's 2020. It would have been, obviously, I would have been much better off if it was 100%. So now you might say, look, this is a pretty nice line of support. You're going to sell it right at support? Yes, because we just looked. Everything else is down. Marathon's only down 38.5%. Everything else is down worse than that. So even though Marathon's trading at garbage levels, if you compare it to the day that I sold Marathon, which was June 22nd, basically everything else is doing just as bad as Marathon or worse, some significantly worse. So I feel like I'm getting $1 for my dollar. Even though every day I wait for this, the equation seems to be getting a little bit closer to, moving in the wrong direction. So what did Marathon do? That's not what I want to look at. So here's the thing with all of these companies, and this is a common theme. I'm going to go through some earnings, and I'm going to be brief about it because we've got other stuff to talk about. But the one thing about these earnings report is most of these companies are currently operating as a Bitcoin mining company, but their future path is as a power company, a data center company, whether it's just being a landlord-tenant relationship or building out the full stack and leasing out compute, being a neo cloud, and everything in the middle. That's where these companies are moving to. I identified 2 companies that I thought, one I know is not going to move there. They've stated it, and there's a fundamental reason why they can't do that. And the other one was BitDeer, I thought would be one of the last ones in. And then they went and got a monster deal. So the future for these companies is data centers. So when you're looking at a financial statement where most or all of the revenue and expenses relate to their Bitcoin mining operations, it doesn't really make a difference if they're doing a good job at this or not. We know Bitcoin's price is way down. The economics of Bitcoin is not great. So nobody's looking at that. What they're looking at is what's happening with their pipeline of power that they have under management, and what's happening with their deal flow pipeline. Are they writing contracts? That's what these companies are all about right now. Other than, I don't know. You can look. There are a few of these companies that I will say their overhead's massive. So I don't like that. So even if they get deals, it's going to take a lot longer just to get to break even because they have massive overhead. Unless, they do a massive restructuring. But I'm not hearing any talk about that. Marathon and Riot have a much higher overhead than a lot of these other companies. So all this stuff is pretty much, a decrease of 27% year over year on revenue. Okay, well, Bitcoin's down. Bitcoin holdings decreased 29%. They still hold over 35,000 Bitcoin. This company has a lot of liquidity. So, from that standpoint, they're in good shape. Liquidity, cash and Bitcoin holdings, $2.5 billion. So this is not one of those companies that I'm selling because I'm worried they're going to go out of business. I just don't see the bull case scenario anymore in this company. Build out the infrastructure layer. So this is what they're trying to explain to people. And I'm going to go one more slide because where am I? They got there we go. Building a scalable energy network through strategic site expansion. 1.4 gigawatts operational capacity. That's what they have currently. 1.9 gigawatts of total capacity, which means 500 megawatts is not up and running yet. And then roughly 4.8 gigawatts of total potential capacity. I pay a lot less attention to potential capacity. That doesn't mean it's not going to happen, but what it does mean is it hasn't happened yet. And if it happens, 100% of the build out has to occur from now until then. So, that is stuff that's, if it's still on the maybe going to happen, looking at it, assessing the deal phase, then it's going to be zero revenue in 2027, zero revenue in 2028, probably zero revenue in 2029. That doesn't mean they shouldn't go do it. They got to start setting these bowling pins up so they can knock them down. But I'm not waiting 3 years for this stuff to get online. And while there's other companies getting stuff online quickly, people aren't going to move their money into somebody who says, you know what, we got a real good picture brewing in 2029, when there's another company going, we're crushing it in 2027. So those are the ones I want to own. They did say on their earnings call, working alongside Starwood, we are progressing lease discussions across multiple sites, and we remain confident in our ability to sign at least 2 leases before year end. That was from Fred Thiel, CEO, chairman of the board. So, Fred's saying, hey, we think we can get 2 deals this year. Now, that doesn't mean it's going to be revenue this year. It won't be. Probably won't be revenue next year. I don't know. And I definitely don't know because they don't even have the deals yet. They're still at 0. So you know what? If I sell all this on Monday and on Friday, Marathon announces that they got 2 big giant deals, maybe I was wrong. But here's the reason I'm not even thinking that way. CleanSpark and BitDeer just announced the game-changing deals for their company. I mean, they are, those companies will be repriced at some point. They are different, fundamentally different companies than they were the day before they wrote those deals. But they got no pop on that news at all. Both of those companies wrote the best contract in the history of their company, and their stock in a 3-day window actually went down. So even if these guys write a deal, I don't think I'm going to miss some monster move to the upside. I think they'll move along with the flow of all these companies. You know, if we have another one of those days where everything's up 15%, I think Marathon will participate in that. But so will wherever else I put my money in all likelihood. That's my theory. And again, that's the short-term stuff. And, you know, I'm not timing this perfectly. I know it. You don't. I mean, sometimes you get super lucky and you do, but that's, in general, that's just not how this works. All right, what's next? So let's end this poll. What do we got for our next poll? And Sour Melon Gaming is saying CleanSpark at 13 is criminal. It's ridiculous. It's ludicrous. I agree.
But those shorts.
We know, right? That's a heavily shorted company. A bunch of these are heavily shorted company. And Old Jock is saying, with over 70 exahash of Bitcoin miners, BitDeer have lots of power available to transition into AI. And they do. They have a very nice power footprint. So they just wrote a big deal, and it was a tiny little fraction of their overall gigawatts that they have. Right? It was, I think, 5% of their capacity. Something like that. You can double check me on those numbers. So yeah, I mean, there's a lot more good news ahead, and that was breaking the ice, and yet the stock's down. So I bought some of it. And I'm likely to buy some more. Another reason Riot may or may not be on the hot seat, they delayed their earnings. So the day that they were supposed to put out earnings, they put out a report. We're putting them out next week or whenever. So Riot is infamous for this. Many, many times, they just haven't even given a date that they're going to put their report out. You just wake up and it's a surprise, we put our report out, because I don't know what their process is. But this is not the first time that this has happened, and there are many times they won't even give us a date. So I don't know what a delay means. One thing it means is uncertainty, but this could range. Maybe it's delayed because they just couldn't get their work done, and so they don't have the statements in the order that they want them. Maybe there was some pieces of information that were late or difficult to get a hold of, so maybe management wasn't done reviewing it and putting their piece of the puzzle together. Maybe they have a huge deal that they're about to announce, and they don't want to announce earnings and then announce a game-changing deal 2 days after they announce earnings. You know, it could be good news. It could be bad news. We have no idea. So we'll find out when that happens. And I see Sour Melon Gaming say, Tom, go over the CleanSpark report. Let's talk CleanSpark next, because they also announced earnings this week. Before they announced earnings, they announced their July operational update. So some of this is crossover. It's in both the July operational update and their earnings report. This is the number one thing. Secures a 20-year triple net lease totaling $6.6 billion in contracted revenue. Includes 175 megawatts of critical IT load, with deliveries expected to begin in Q4 of 2027 to a high investment grade tenant. So they have not disclosed who this is. There may be a confidentiality agreement. We may never know who this is. We do know it's $6.6 billion, which I think worked out to like, well, let's not think. Let's calculate. We got...
I got to sneak out time.
All right, George.
I'll be online watching.
We'll see you in the comments section. So that's $330 million a year. And whereas BitDR is making 90% net profit on their deal, Cleanspark's making contracted revenue with nearly 100% net operating income margin. So this is $300 million a year that is just going straight to the bottom line. It's a triple net lease. They don't have to pay any of the expenses. They are the tenant, or they're the landlord. They are collecting money from the tenant, and it's just profit. So this is what happened to Cleanspark. And on this news, the stock is down. So if it wasn't already one of my biggest positions, I would be backing up the truck. Again, not financial advice. I'm just telling you my thoughts. I don't understand how people can't look at this and go, wow, this is fundamentally, this company now literally has nothing to do with the company that's existed for the last 5 years. This is that dramatic of a game-changing, and it's just one contract. By the way, it's only 175 megawatts. They could do this, right? They got 10 times that much capacity, more. So, and this is getting priced in at zero, straight up at zero. So let's keep going. As a footnote, they happen to mine 586 Bitcoin. Bitcoin produced year to date 4,310. They have 50 exahash. They have not bought a machine in years. Almost every single one of these companies, other than the two big exceptions, are ABTC and BitDR, who are both adding to their fleet aggressively. Everybody else has either stopped buying and left their fleet alone, or has been continuously taking offline. So out of their 50 exahash, so that number they reached, that was their goal. They told us they were going to do that. They did it. They missed by a couple of weeks, and this was a year or a year and a half forward projection, so it was a phenomenal execution. They are currently operating at about 38.6 exahash. Peak efficiency, 16.07 joules per terahash. That has been the identical number for 2 straight years, and it's because they have the exact same identical fleet this entire time. This is not a company whose future story is about Bitcoin and Bitcoin mining. Having said that, they do hold almost 14,000 Bitcoin on their balance sheet. So they have a lot of liquidity. If Bitcoin takes a nice run, and I think it's going to, right, they're going to get a lot of upside from having mined Bitcoin all these years. So what you want to see with your Bitcoin miner, if they're switching gears to AI, and almost every single one of them is, you would hope that they've done one of two things. Either during that time, compiled a nice hodl of Bitcoin that, if Bitcoin goes up and hits new all-time highs, is going to pay off in a big way, or they've sold that Bitcoin in order to build out AI infrastructure. So that's been a good use of capital one way or the other, in my opinion. We don't see these firms diluting the way they used to. Debt is the new at-the-market offering. Some of it's preferred debt, which can be dilutive ultimately, or they do have abilities to either mitigate or totally get rid of that potential dilution. Or some of it's now starting to be traditional debt. But they have a nice balance sheet. So let's just go to their... All right. And Dan, thank you for the super chat. I'll just interrupt this for a second to get to Dan. Strategy, or formerly Microstrategy, going higher now? Question mark. Tom and George, thoughts? I mean, my thought is it all has to do with two things. Number one, Stretch, their preferred stock, which is now run from $71 up to $95. So I think that is getting back into a range where people are going to be comfortable buying the common stock. It ran up to 100. There's a wall of resistance at 101. My personal opinion is it's going to fight that wall at 101 until Stretch gets to $100. The other factor is, where's Bitcoin going? If Bitcoin runs off to the races, then I don't think 101 is going to be resistance, right? If Bitcoin runs from 64 or 5-ish to 70,000, MicroStrategy is going to take that ride along with them. I got out of my MicroStrategy and into Bitcoin because I just don't feel there's going to be a big premium between the two anymore. It used to be that MicroStrategy traded at multiples of its Bitcoin. At one point, it was over 3 MNAV. It's now at 1.07. It did get down to 1.0. And at 1.0, which I had been calling an absolute floor, I did get nervous. It could go lower than this. But they held it by, starting to put mechanisms in place that day to fix their preferred stock. So I don't own MicroStrategy. I sold my MicroStrategy. I'm not buying it back. But if Stretch gets back to 100, if Bitcoin runs, and if MicroStrategy gets back into the buying Bitcoin business, which I think they will sooner than later, then yeah, it'll probably do okay. But to me, it's not a good risk reward from my perspective, for my portfolio. Okay, CleanSpark. Quarterly revenue, again, doesn't really matter, $138 million. I do want to take a break and show you something and this is one of the things with some of these companies that I'm frustrated with. So, this is all Bitcoin. It's a year-over-year decrease of $60 million, or 30%, from $198 million. That's not what frustrates me. I get it. Bitcoin's down. Bitcoin economics stink. So they're not running every machine at full capacity, and they're getting less for the Bitcoin that they mine. But they've got 130, even with all of that said, they had $138 million of revenue. I'm just going to go to another company. And this is more of a frustration than it is a knock on this company, because I actually think this is a good company. Just have to find them. Here we go. TeraWulf, which trades at a significantly higher market cap than CleanSpark. What's my point? TeraWulf had $44.7 million of revenue. And that includes, they've basically abandoned, you can see 12.8 million of that is from Bitcoin. That's half of what it was last year. they're winding their Bitcoin down. They've got 32 million of revenue from high performance compute leasing. So at least it's begun. But this is such a tiny amount of revenue that it's just a small fraction of, if we go back to CleanSpark, it's a small fraction of what CleanSpark's making in revenue. Right? CleanSpark's doing almost triple that. So even though TeraWulf, and again, I'm not knocking this company. I actually think there's good things ahead for TeraWulf. Let me see if I can find what I'm looking for here. That's probably in their investor. They have a bunch of deals. Google, Anthropic, FluidStack. They have a massive amount of contracted revenue, $27 billion. My frustration is $27 billion of contracted revenue and $42 million of actual revenue this quarter. I mean, it's going to take them 300 years at this rate to go through these contracts. Now, they're not going to stay at this rate. I understand that. But there is something to be said for those companies that are going to be realizing this revenue sooner than later. And the thing is, if we look at this, this is not what I want to look at. Let me get to it. $168 million of revenue last year. They're looking for 2026 to get to $267 million. Now, this is a nice jump. They're looking to get to $906 million next year. That's a triple. 239% growth. So the good news is 239% growth. The bad news is it's a lot less than a lot of its peers. But it's trading at, this is an $8.5 billion market cap. CleanSpark is a $3 billion market cap. So TeraWulf is just shy of triple the market cap that CleanSpark is. But if you look at revenue, $561 million. They're going to do a lot more this year than TeraWulf. $700 million next year. Now, TeraWulf's looking at $900 million, so they will pass. And as a percentage, it's a lot more. But the reality is, neither of these companies will have kicked into gear by next year. Now, we know. We just looked at the lease that CleanSpark got. They said it starts in the fourth quarter of 2027. So it's going to be the 2028 numbers that start to look a lot better. And, you know, to be fair, TeraWulf has substantially more under contract than CleanSpark does. CleanSpark is just now done proof of concept. We just looked at these guys. They've got $27 billion of contracted revenue. They've got partners like Google, Anthropic. So they are further along the curve. They started first. CIFR, TeraWulf, and IREN, to me, are the three companies. Well, Core Scientific, they ran into a bump in the road in the middle. Those are the four Bitcoin miners that were first to switch and start to try to change their narrative from Bitcoin mining to high-performance computing. And they've had varying degrees of success. You can see they're almost triple the market cap as their peer CleanSpark is. So obviously the market has valued this. Now, currently, everything's pulled back 35 to 45%. So from that perspective, I think many of these stocks are a buying opportunity. Even at this gigantic run-up, I think TeraWulf's a buying opportunity. Let me just find something real quick here. I want to go through. So these are some of the companies that reported earnings this week. And I want to talk about why I think a lot of these companies are wildly underpriced. Even the ones I don't have high confidence in. This is CleanSpark. So they reported earnings. We're going through them as we speak. This is 1, 2, 3, 4 people yesterday and today on those earnings reports. Buy. 26, 22, 23, 24. The average of all of their analysts is 23.75, just under 24. That's almost a double from where they are right now. That's like a 90% move to the upside is the 1-year price target from analysts. And it's not a price target that was made before earnings dropped and now they got to reassess. You can see these are all after they dropped their earnings. So I think there's a reason to be optimistic that CleanSpark's going to run a double. I know a lot of people have much higher numbers than this in their head. And I think time's going to tell, and the flow of money is going to tell where the top is. But, you know, if you go back and look, at CleanSpark, I mean, they were at about $24. Right where 20 this day they peaked at $23.61. And what did we just see? $23.75 is the average analyst. So that's the average analyst is predicting they're going to exactly retest their highs, which I think is reasonable. And that's just their local high, because they got up. Well, actually, you got to go back. This is not even a fair number to look at. This is January of 2021. They started mining Bitcoin in late December of 2020, so they'd been mining Bitcoin for less than a month when this happened. They had only mined, you could count on your fingers the number of Bitcoin they had mined when this stock ran up to $42 on no revenue in what was an actual bubble. So everybody's saying AI bubble, AI bubble, AI bubble. CleanSpark had $10 million of annual revenue when they traded for $42, almost $43 a share. They're now projecting $700 million of revenue. Now, I understand all things aren't created equal. There's been a lot of stock dilution since then, but it does not make up for the fact that this went from a $40-something stock to a $12 stock. So there is massive room to the upside on this company just based on one lease of 175 megawatts. They have almost 2 gigawatts of power. That's literally 1/10 of their power. And that's going to net them $300 million of profit a year. So if these guys execute, and obviously that's the risk, there's always risk, nothing's free. But if these guys execute, the upside is huge right here. So I have a very high level of confidence in this. This is a very high conviction stock for me. So I don't even want to go through their earnings because it really, again, this is what they do on Bitcoin mining. I will say that in 2028, I would expect 90% 50% or more of their gross profit to come from compute versus Bitcoin mining. So trying to dig into how their Bitcoin mining operations are doing, to me, is totally irrelevant. And that's kind of the conundrum of everybody announcing earnings. It's almost like, who cares? We care about what's going to happen. So to whatever extent they can give some guidance, you know, Fred came out and said, well, I think I'm going to get 2 deals between now and the end of the year. Well, if you believe him, you probably want to buy that stock. I want to sell it. Okay. So you can see total current assets, total liquidity is $1 billion here. So this is another one against long-term debt of $1.8 billion. And I will tell you, a lot of the companies, and they are further along in the process, but like the TeraWolf and I think even BTDR, CIFR, a lot of those companies, they have $5 billion, $6 billion, $7 billion, $8 billion of debt. And right now, CleanSpark's only at $1.8 billion against $1 billion of liquidity. So I like their balance sheet. They've also said they've got enough build. They don't have to spend any more money to get the contract they just signed up and running in full. So again, I'm not going to look at their income statement because it doesn't matter. To me, the story on this one is they're well-funded. They have a gigantic deal. It's their first deal. They just got it. This is going to be a late 2027, 2028 story. So I don't know. Is that going to hold the stock back until it happens? And Sour Melon Gaming said, Tom, the CleanSpark call basically sounded like they will exit Bitcoin mining after this cycle. So I do think that's right. You can see they're reporting 50 exahash nameplate, but they're running 38 exahash. And I think they'll wind that down. I think this goes back to the conversation we had a couple of weeks ago. I think there's only going to be 2 or 3 or 4 companies at the most that remain Bitcoin miners after the halving. The economics of Bitcoin mining is just not worth it. Now, there are other ways to mine Bitcoin versus a publicly traded company that has to put a lot of CapEx in. There's a lot of stranded energy around the world, so stranded energy is wasted energy. So if you can convert that energy into Bitcoin, I think that's a big part of the Bitcoin network 3 years from now, 5 years from now, 10 years from now. I think you're going to see more and more and more of that. All of a sudden, you're going to see the Exxon Mobils of the world start to be big Bitcoin miners. There's other scenarios that make this work. I think only a few of these companies are going to stick with Bitcoin mining after the halving. One of which is ABTC. I won't spend much time on them, but they announced earnings. They will be Bitcoin miners after the halving, or they will be gone, because they are a majority-owned subsidiary of Hut 8. They have all of their Bitcoin miners. They are a tenant of Hut 8, and they lease out all their space. So they can't sell compute. They're already leasing it. That's the nature of their business. They are a Bitcoin mining company, and this isn't pieces of a puzzle I've put together. They have said so at the top of their lungs. They are a Bitcoin mining company. They are a Bitcoin mining ecosystem. That's 100% of their focus. I do think this company is beaten down to the point where in the first 3 weeks of this company trading, I said it's probably the best shorting opportunity I've ever seen in the stock market. But it's now down 97%. So that's done. I do think it's actually trading somewhere near fair value. I'm not going to buy this stock. Just FYI. I'm not recommending you buy this stock. I'm not going to buy this stock, but I do look at it for the first time and say, well, it's in the neighborhood of where it belongs. And they do now have over 8,000 Bitcoin. A couple of key things, and then I'll leave this because I don't think a lot of people are buying this stock. But they have 8,000 plus Bitcoin. That puts them in the top 15 Bitcoin holders of publicly traded companies in the world. So they are a player from that perspective. The other number that jumped off the page at me on this one is, let me find it. Must not have jumped off the page at me, or I would have found it by now. Cost to mine was $36,500 per Bitcoin. With that in mind, this is a company that has a business model, and the other one is 25 exahash running at an efficiency of 14.1 joules per terahash. That's the lowest reported efficiency of any fleet we've ever seen reported. Now, BitDR makes their own machines. They're making machines that are more efficient than this. So at some point, they may take this out. IREN's fleet was at 15 joules per terahash. I don't think IREN's going to be a Bitcoin miner anymore. I think they've already said so much. So it doesn't matter what their efficiency is. But at 36,000 a coin, at 14.1 joules per terahash, if Bitcoin itself has a decent trajectory and gets back into a bull market, this company can survive through a Bitcoin halving. My point would be, I don't think it thrives through a Bitcoin halving. I think Bitcoin has to go ballistic for this company to be a big winner going forward. So that's my opinion on this company. They're all in on Bitcoin. They got 8,000 of them. So if Bitcoin doubles or triples or quadruples, they're going to make all that money, plus whatever money they're making on the Bitcoin they mine with their ever-growing fleet. Not really going to have to. Here's one of the things that I think is going to be different this halving. This will be the first halving where the big publicly traded Bitcoin miners, they're not going to have to throw out all their machines and get all new machines. 14.1 joules per terahash, my guess, is going to get the job done at the next halving. I don't think the Bitcoin mining network is going to be anywhere close to that. It's way higher than that right now. So if you're substantially better than the overall network, you're winning. I think this will win. In the past, I mean, this has moved down dramatically as time's gone on. So, again, I don't think you're going to see, because it gets harder and harder as your fleet gets bigger and bigger. If you've gone from 1 exahash to 3 exahash to 8 exahash, and now you're 25 or 50 or 70 exahash, if you got to go buy another 250,000 machines every time a halving comes along, then this business model is a failure. But I don't think that's going to be the case. I think you're going to see all these machines can stay plugged in, and they can average that down with whatever the latest and greatest machines are, 2 years from now at the next halving. That's my guess. That's how I see this going. And I don't see a lot of people sticking with it. ABTC is going to stick with it. It's all they do. I think BitDR will stick with it. They make their own Bitcoin mining machines. They actually sell Bitcoin mining machines to third parties. So they have a huge efficiency there. But they can also get paid a lot more as a tenant, as a landlord leasing out to tenants There is cost to switch over, right? All data centers are not identical. There is cost to take a Bitcoin mining data center and convert it into a high-performance computing-ready data center. But the cost is not enormous, and if they get a contract, it's well worth paying. So they'll do that to whatever they can. And I don't even know if I can get to 3 to 5 companies. I see somebody asking, what's your 3 to 5 companies? There's 2 that I have very high level of confidence in. I think you're going to see ABTC, we know. I think you're going to see BitDR stick with it. And then I think the list gets very, very short. It's hard to pick the next company. Marathon, maybe. I'll tell you who I don't think. So Marathon may use their excess compute to mine Bitcoin. Riot may use their excess compute to mine Bitcoin. But I don't think these are companies that are going to be growing their fleet. Right? I don't think. Same thing with CleanSpark. If they leave a few machines on because they haven't filled them up, but otherwise they're probably out. IREN we know is out. CIFR is going to be out. TeraWolf's going to be out. Keel has said we're out of the Bitcoin mining business. Hut 8 sold their Bitcoin mining operation. They still own. They're still the major shareholder, and that's ABTC. BitDR will be in. Hive will probably be in. That's probably the third one. And I don't know what the fourth one would be. I really don't. So, drop in the comments if you guys got somebody else you think is going to stick with Bitcoin mining after this halving. I see the network being a very different thing. I see it being sovereign nations, right? People who have different formulas. They don't have fiduciary responsibility to shareholders where, they can just go along to get along and lose money or break even as a business model. So it's the other reason I think, despite the fact that the prediction is there's going to be massive increase in the Bitcoin mining network, I think we're going to see it keep going sideways. And I can take a look at that right now. I've got a backup site just in case, because this site broke for a week and it had the wrong information, dramatically incorrect. So now I have a second site where I double check all this. But if you look, and I'll refresh, we're at 126 trillion on the difficulty level. If I go out to the 3-year, you'll see back in June of 2025, over 13 months ago, we were at 126.98. That's higher than this. So over the last year, we're down a little bit. Now, this next adjustment, 10 minutes needs to be the average over all these blocks. If it takes longer than that, they make it easier to mine Bitcoin. If it's faster than that, they make it harder. Well, you can see it's averaging 3 seconds faster than that right now. We're very close to the end of this adjustment. So this is predicting it's going to go up to 126.94. I am going to take a look at the other site because they don't have the same numbers. Well, pretty darn close. 126.23 is the current difficulty level. They're predicting a 0.75% adjustment to the upside. They're predicting a 0.57 adjustment to the upside. So you can see there's not much time left. That's not going to change much. So we're going to be somewhere around still even. So that'll be 14 months later, and we're still sideways. I don't see this growing. Who's adding machines? People are turning off machines. So I think it's going to be a while before this network starts to grow, which is healthy because nobody's making money mining Bitcoin. Now, for the companies that spent all their money in 2022 and 2023, and they bought gigantic fleets of Bitcoin miners, that money's already spent. So from a cash flow standpoint, they should leave their machines in, mine every last Bitcoin they can out of those machines, as long as the cost of power is less than what a Bitcoin costs. And you can see ABTC, even at these low numbers, it was still like a 50% gross profit margin. So for the machines you've already paid for, run them into the ground. Get the last breath of life out of them, because it's all freebie at this point. And then when they're done, I guess you throw them out. That's it. And I don't think they're going to buy new ones. So there are a lot of companies that are still generating cash flow, even in these horrible Bitcoin economics, because they're already out of pocket the other cash. They are generating cash flow mining Bitcoin, and they're putting it into the AI segment of their business and building out their data centers. So see Coach saying 3 years ago we were sold snake oil. I mean, it feels that way. A lot of things happened in that period of time. We did not have a normal cycle this time. And I know a lot of people are clinging to the fact that there's a 4-year cycle and everything's exactly as planned and we're right on schedule. But the reality is, the drop off, we did not have a blow off top this time. Every time that has got less and less, but this time it didn't happen at all. So with this, if this is the new trajectory, then 1 or 2 halvings from now, it will be impossible to mine Bitcoin at a profit. That doesn't mean it'll be impossible to mine Bitcoin. Again, for the companies that have stranded energy that they're going to throw out, right? You see the flares, that's just burning energy that's got nowhere to go. Well, mine Bitcoin with it. So there's avenues to keep the network healthy. I'm not saying Bitcoin's in trouble as a network. I'm saying publicly traded companies will not be able to make money with this trajectory. But I don't think we're on this trajectory. So in other words, we went to 123,000 peak this time. If the next time all we get to is 160,000 and it's, 4 years later and the network has grown and it's doubled and the reward's been cut in half, now all of a sudden you're going to lose money every single Bitcoin you mine. Even if you're using your old rigs and you don't even go buy new rigs, you're going to lose money every Bitcoin you mine. So, right, there's got to be some balancing act here. And Coach is saying, Matt, was clear additional $2 billion debt to get that infrastructure built, which I think we all support. They still have their equation makes sense to me right now. I am a big believer in what they're doing. So I have a high level of conviction. I think their execution is good. I think they're on the right track. I think breaking the ice, getting that big contract that's going to kick off all that bottom line money is a game changer. And I think people are sleeping on BitDeer because they basically just had the same exact situation happen and their stock continued to crash. It was in the middle of a crash and it continued. I see George. Kudab is George. He's in the comments section. And he's saying it's still going to grow because of Tether. All right, let's see. Okay, so I want to go through some of these. I want to show you guys something because to me, let's get back to this chart. And then I got another one that kind of summarizes what the deal is. So Cleanspark at $13, all the analysts are coming out and putting a $24 price tag on it. That's after their earnings. Marathon. Not as good. Marathon's average price target is 15.39. Now, they went under $10 today. I think they came back above, where'd they close? $10.09. So, I mean, this stock has tanked. It did get down to $9.69 today. I mean, this is crazy. I hope this line of support holds only because I'm going to get rid of it. So if it takes a nice bounce, great. So be it. But I talked earlier, for those of you who got here late, you can listen to that later. And if you got here later, if you have not yet, if you could please smash the like button. It does still help the stream even at this late stage. So much appreciated. Okay. Let's go back to the chart. All right, we got one analyst that looked at the financials, and he's buying the hype. It's not exactly hype. He's putting a $15 price target on it. This stock's now trading at 10, so that is a pretty big upside. Needham, hold. No price target. Not so good. Cantor Fitzgerald does say buy, but he's got a price target at 12. It's trading at 10 right now. That's a 20% upside. To put it in perspective, the exact same person at Cantor Fitzgerald thinks CleanSpark has a 100% upside and Marathon has a 20% upside. So Marathon, not nearly as good. TeraWulf, which reported earnings. TeraWulf is now trading at what? 17? Let's go look. $17. Average price target, $37. Now, there's an outlier. I'm going to go to the bottom. We got one guy here at Morgan Stanley who's extremely enthusiastic. He has put a $72 price target on this thing. That was not after earnings. That was just 1 month ago. But they've reported earnings in the middle. And, you know, $72 is skewing this number. But look, these are after earnings. $30, $33, $45, $36, $30, $29, $29. It's trading at 17 right now. So all buys, 100%. Everybody. So no, it's telling that only Marathon, which is a much more institutionally held company, many more analysts are following it than any of these other companies. And they only had 3 people come out and opine on their earnings. And one of them said there's a 20% upside, and another one wouldn't even put a price on it and just said it's a hold, not a buy. So that was ugly. This, I mean, if the analysts are right, this is a home run. Now, again, obviously, this is one data point. We don't just look at analysts and assume that they're correct or that they're even intending to be correct. But this is pretty darn good. Get this down to the next page. CIFR, trading at $17. Analysts have them at $30.57. Massive upside. This guy at Morgan Stanley's got the, he really thinks these are going to the moon. He's got a $43 price target on CIFR. It's trading at $17 right now. But 22, 28, 27, 30, 25, 30. All buys. So everybody's bullish on CleanSpark. Everybody's bullish on TeraWulf. Everybody's bullish on CIFR. BitDR. They had a big announcement this week. They did not have earnings. But after that announcement, 1, 2, 3, 4, 5 people came out and re-rated. Buy. This stock's trading Is it in the 9s now? What happened to BitDeer? $10.88. Sorry, this did have an up day today, up 3.4%. $10.88. And analysts have a price target of just under $23 on this. That's more than a double. And the people who priced it after this call, 22, 20, 25, 18 at Cantor Fitzgerald, that's the low, and 23. So pretty much calling for a double. HUT 8, which has pulled back tremendously. HUT 8 has an average analyst rating, so they also reported earnings. Look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 analysts came out. 10 out of 10 put a buy on this. Morgan Stanley, once again, by far the optimist. This guy's got a different model he's writing. $273 is his price target for HUT 8. It's currently trading in the 80s. 150, 143, 154, 170. There's some 124, 120, 195, 138, 245, but all buys, all a lot of upside versus the $88.59. The average is more than 100% increase. So if you look at the whole shooting match, how much upside do analysts see? This is for all of the stocks that are some combination of Bitcoin miners turning into AI, either turning into full-blown neocloud, or just renting out the power. Right? Landlords, anywhere from landlord to the full stack neocloud, these companies range. And look at the upside on these. I found this interesting. This is versus analysts. So we looked at a lot of these. TeraWulf, 122% upside. BitDeer, 109% upside. IREN, 102% upside. The winner out of all of these is Applied Digital with 155% upside versus analysts' expectations. This list is not in the order that I would have it. I am surprised that this one has the most upside. And Nibius has the least, 36%. And this stock has dropped drastically. So this was, I think it got up to $299.86. Call it $300. It's down to $188. So this pulled back along with everything else. Yet, analysts say it's got a 36% upside. CoreWeave. Now what's funny is Nibius, CoreWeave, these are pure play neoclouds. They have the most contracts out of any of the companies on this list. Now, CoreWeave's run like the wind. So I do want to look at CoreWeave. Right, CoreWeave got, whereas everything else has been going down, CoreWeave just got a 50% move to the upside in the last couple of weeks. So the fact that there's not a lot of move left makes a little more sense to me. But I mean, this got a big run up, but then it pulled back, right? It's had some pretty bad days in a row here, but it is from the bottom. It's up 27%. But that means 27% plus 36%. That's still going to be the worst performer on the list. Riot's near the bottom. Then you get to, but really from Keel up, Keel 70%. Marathon has 83% upside versus analysts' expectations. CIFR 90, HUT 91, CleanSpark 92. And then IREN, BitDR, TeraWolf, and Applied Digital all over 100% versus what analysts are talking about. So take that for what it's worth, because, you know, analysts aren't exactly fortune tellers at this stuff. But it does show that there's sentiment out there that everything's just gotten beaten up badly, and the market is expecting this to correct as these stocks are all putting out earnings and the market's reacting negatively, not so much to the earnings, but to the entire sector, and the greater sector, which is everything AI related, is in a pullback. The analysts are looking at this going, okay, that's all short-term noise. These stocks got massive room to the upside. And this gets back to my feeling that there's a couple of more waves left. This is not a bubble. We had a bubble in December of 2020. Small cap, high growth stocks, most of which had somewhere between zero revenue and, $10 million of revenue, like CleanSpark had. A lot of them had zero, and they were up 200, 300, 400, 500, 600, 700%. That's a bubble. These companies are having massive growth. They're writing multi-billion-dollar contracts. TeraWolf has 20-something billion dollars in their backlog. That's not a bubble. Now, there's execution risk because most of that's going to come in late 2027, 2028, 2029, etc. So yes, nothing's free. There's always risk, but it's not a bubble. And the real sign to me, in an unrelated note that I will bring up because I'm just going to keep harping on this, because this is a bellwether. This is telling you when the AI stocks get back in favor. This is Micron. It's not so much that it's down 30% in the last 6 weeks. It's more the fact that it's trading at a 5 or 6 forward PE. So for as long as stocks like Micron, SanDisk, they just destroyed the best earnings report they've ever had by a mile. Red Day. They're down 50% in the last 5 weeks. The only reason I'm not buying SanDisk is they're down 50%, and now they're at like a 10 forward PE. Well, Micron's at a 5. And by the way, Micron has a much bigger moat, in my opinion, than SanDisk does. I think they both have something that's in such short supply, it's going to take 3 or 4 or 5 years for the supply chain to correct itself. But there's only 3 companies on Earth that makes what Micron makes, which is high bandwidth memory. And there won't be 4. That's it. There is a Chinese company that's in the beginning phases of ordering a machine that, if they do everything perfectly, will make lower than the lowest quality high bandwidth memory on the market, maybe 3 to 4 years from now. So For something like, for as long as Micron's trading at a 5 PE, I know we're not in a bubble. I never heard of any bubble in the history of the universe where stocks ran all the way up to 5 PEs. Right? Now, the stock I am selling next week, AMD. Not because it's a bad stock. I think they're going to be one of the big winners in the AI trade. But they're up 146%. That's nowhere near what a lot of these memory chips are up. Some of the memory chips are up thousands of percent. But here's the difference. AMD has a trailing PE, and this isn't fair. We're going to calculate their forward PE. They have a trailing PE of 123.62. When your PE is measured in the hundreds, you are trading strictly on momentum. Now, you may grow into that PE, but it's going to take 3, 4, 5, 6, 7, 8 years to do so. So you'll see stocks, and I'll talk about one next, which is Palantir, have huge moves to the upside and huge moves to the downside and remain highly volatile stocks. But I do not believe you're going to see Palantir get past their $200 cap that they were a while ago for years, because their PE is insanity. And it's really simple. Price earnings is not some mystery number. And a lot of people go, well, that's not a real. People don't look at that. Price to earnings means I earned $20 a share this year. If my stock is worth 100 times more than that, then I have to do that every year for the next 100 years to make what my stock is worth. The S&P 500 is trading at a 22 PE. That's normal. There is a premium. If anything, tech stocks traditionally get a much higher premium, which is why you see things like AMD at 123, Palantir at like 180. Amazon was between 130 and 200 PE for years, but they also went sideways for 7 years. And now they have a good PE. But if you bought it 7 years ago, yeah, you got a lot of ups and downs. If you were a swing trader, you made money on the ups and downs, but 7 years later, you were right where you started to begin with. Except you weren't at a 200 PE anymore. You were at a 30 PE. And now all of a sudden your company is a buy. But you want to wait 7 years for that? And I know a lot of people are going to totally disagree with this. They're going to go, AMD, this is a big part of AI. And it's just going to grow, grow, grow. But here's the thing. Even if I look at forward PE, so that trailing PE is on this $4.17 that they made last year. They're looking to make $7.56 this year. So if we do the math, that's a 64 forward PE. The S&P 500 is at 22. A 64 forward PE is massive. Now you can go, okay, well, let's go even a year forward to 2027. They're looking to make $15.46. That's a 31 PE for 2027. Now, that's actually a pretty reasonable PE, but you can see what that's saying is the market has already priced in that this company is going to go from earning $4.17 to $7.50, and then doubling that again to $15.46. It's got to do all that just to get back to a 31 PE. So that is priced in. Now, what the market is, if you see on the screen, for September, the market's estimating a $12.99 billion of revenue. And if we go down, you'll see they just reported, I don't know if they show this or not. That's basically what they just reported, was $13 billion. So, and the market was expecting 12.5. So they were expecting 12.5. They got 13 billion. That's a beat. It should be good. But the problem is what the market was really expecting was for them to crush this number. That's when these stocks are momentum stocks and they roll. Even though they're still overpriced, it's still way too much money, but the momentum is there because they go, man, we raised our price expectation to 12.5, and they still did 14.5, right? They did a number that doesn't even resemble what we were thinking. Like, for instance, SanDisk did, and they still went down. And then the market's estimating 16 billion for the next quarter. So there's already, the market's pricing in 46% growth this year and 72% growth next year. So unless they do significantly better than that, there's no room fundamentally to the upside for this stock. There is room fundamentally on momentum. This is an AI stock. It's the only other company realistically that does something similar to what NVIDIA does. NVIDIA's worth 7 times this much money. Now, they make more than 7 times as much money, but the point is, this is the only competition. So, you know, if you're going to bet on second place and hope there's a run, there probably will be. So I don't know, but the fundamentals aren't here. And I've just sat with this stock for a while. It was doing its thing. If we look at the chart, it gapped up. Right? This one day, it gapped up 18%. From there, and this is the neighborhood I got in after this gap up. But it was clear this was a momentum play. So it still ran up 43% from there. But it didn't quite get to 600 and it ran into a brick wall. Now, it's probably going to end up looking like, you know, this was some consolidation. And it could easily take the next leg up. And I'll miss that. But I don't have conviction in the fundamentals of this company versus their valuation. Not is it a good company or a bad company. Just versus it's, you've got the choice, can I trade Micron at a 5 PE or can I trade AMD at a 60 forward PE? It's just too big of a difference. And you're going to get this argument, and I've told people this for months, you are going to get most of the people that talk about Micron to say, we've seen this movie before. Micron sells memory. Memory's a commodity. Every once in a while, there's a shortage, and they have a good year, and then they tank right back down to being a commodity and make pennies on the dollar or lose money. Let them keep selling you that narrative, but if you look into it, you'll see they're sold out for 2026. They're sold out for 2027, and they couldn't even fill every customer's order. So they're sold out next year, and there were customers that they only filled 60 or 70% of their order. They have, with companies like Apple and General Motors, they've signed long-term contracts locking in prices higher than the prices that they have right now where they're minting money. By the way, they made more money in this most recent quarter, in this one quarter, than they did in the full 3 full years, all added up put together before that. And the only thing that's better than that is they're going to make more money than that next quarter. And they're going to make substantially more money than that every quarter next year. So the 2027 story is already done. The 2028 story is pretty much locked in. I think the 2029 story is locked in for these memory chips. I think somewhere in 2030 and then in 2031, because there's going to be, all these companies are also building capacity. That's going to start coming online in 29, 30, 31, 32. So now we don't know what the demand versus supply equation is going to be 5 years from now. But guess what? I don't really know that for any stock in the stock market. The 5 to 10 year outlook is not what stocks trade on. These guys are going to make $500 billion or $1 trillion in the middle. If after that things go back to normal, well, then they just made more money than any company in the history of time has ever made in a 5-year window. Not too bad. So this is why I look at this. It's why I own Micron, and it's why I'm looking at stocks like Micron and AMD. As those guys run, we know the AI trades back on, and when that happens, then Cleanspark's going to run, IREN's going to run, CIFR's going to run, TeraWulf's going to run, etc., etc. So, and I'm not saying all those stocks are created equal and they're all going to run the same, but momentum trades on momentum. So, BitDeer did not have their earnings yet, but they did have a gigantic announcement on a multi-billion-dollar contract. And George is saying, did you see that Mitch McConnell went home? I did see that, although I didn't actually see him. All right, let's see. It's getting late on me here. I think I hit most of everything we were looking to talk about. There's some more earnings, but we pretty much hit all the big ticket items here. And we've been running pretty long. So I'm going to wrap it up. I want to thank everybody for being here. Thank you, Sour Melon Gaming. You made it from start to finish. Much appreciated. Alim, I see a bunch of members. I see a bunch of subscribers. So I want to thank everybody for supporting the channel, showing up, smashing the like button. If you haven't, you can even hit it on the way out. It does still help. I hope everybody has a fantastic weekend. For the members, I will see you guys on Tuesday, and let's hope we get into the good part of this story here. Let's get some green going. So have a great weekend, everybody. Thanks.